We are living in interesting times, and in if anything, this could be a very interesting week. We are following up on a week where we saw very substantial increases in the NASDAQ, very substantial increases in Nvidia. We saw the Nvidia situation raising all boats, including Tesla. I am going to take a little bit of a detour this week on our Monday morning show to talk about the things I think are going to be moving the market for a long time into the future. And I think we're going to see more of that really start to show itself next week. This is Randy Kirk. If you like this kind of content, we're on Sunday night. I do a show called Monday Morning that talks about the financial news, financial information, things that are going to be happening in the week ahead, and in particular with regard to Tesla. Hit like if you like that, hit subscribe, hit notify. I've got to tell you, I've got some stuff coming up this week that you're not going to want to miss. So if you hit the notify button, you will be, this is Brian Wang will be back. Brian White will be back. Larry Goldberg will be back with a show you definitely don't want to miss. I mean, we've got some big shows planned for this week. And then, of course, if you'd like to help support the channel as we try to produce better and better information and content for you, please consider Patreon. It's all in the information below. All right. So like I said, we're going to get a little esoteric here. We're going to take a look into the future. There are major economic earthquakes coming. And quite frankly, you can start searching and searching and searching. You're going to not find many people that are willing to talk about what the future might actually look like. Well, as I told you months and months ago, if you've been watching this channel for a long time, I really wanted to create Patreon, my Patreon. I wanted to have a very special Patreon where we're going to talk about what would the future actually look like. But while I had a couple of people that wanted to play ball in the Patreon space in looking at some of those futuristic ideas, it didn't really work out. You know, some things work, some things don't. But I've been studying it. I've been thinking about it. I've been reading as much as I can. And I've got some pretty significant theories. Maybe they're all completely wrong, but I think maybe you'll like them. And I'd love to hear in your comments below whether you think I'm getting any of this right, whether I'm getting it completely wrong, or what you think about the future. Believe me, I'd like to see some very long comments that talk about your theories about what will the world look like 5, 10, 15, or 20 years from now. All right, so let's talk about the first big economic earthquake that's coming. And this is not about tech. This is not about job loss. This is about the baby boomers are now 62 to 78 years old. Virtually all of us in the baby boom world will retire within the next decade. Many are already retired. Obviously, the ones who are 78 years old now, with some exceptions, are retired. But you've got 62 as the youngest baby boomers. So pretty much 10 years from now, when those folks are 72, the baby boomers will be out of the way. They will no longer be holding on to these top tech jobs and these top CEO and major management jobs that have been really holding back Xers and millennials for a while. This is going to be taking another decade to really fully happen. But finally, the X-Gens and the millennials will be able to move into some of those positions that the boomers have been really holding on to. Well, also what's going to happen in that 10-year period is a lot of us are going to die. So a lot of baby boomers are going to meet their maker, and hallelujah, looking forward to meeting Jesus. So, but what is that going to mean? It's going to mean the largest transfer of wealth in history, and not by a little bit. No, this will be massive. And again, go ahead, start looking for people that are willing to talk about what that really means. You know, you're going to have people that are going to be transferring millions of dollars down to the millennials and to the X-Gens. And those folks who may be just middle class now are going to be rich. And some of those are lower middle class, and they're going to be upper middle class. And it's going to have a big impact. I mean, it's going to do things like some people are not going to need to work anymore. It's going to be like winning the lottery, and they're going to be like, I don't need to work. So they'll be retiring early. It'll mean that they'll be able to buy a bigger house. In fact, the bigger house might be in the trust, and they could just move in. Other houses will be in the trust, and people will just be renting those out, and they won't come back onto the market, as we've been seeing for the last 15, 20 years, where the boomers have held on to these homes. So it's going to be interesting to see what happens to this transfer of wealth, how the millennials and the Xers spend the wealth. In some cases, when you get into your 60s and 70s, like these Xers will be getting into their 60s and 70s, they're not really that interested in spending anymore, and maybe they've already got enough. So what do? And does this have a big impact on charities? Anyway, this is going to be a big deal, how we see people's spending patterns change, how we see their employment patterns changing. What will that mean for lower oncoming generations? What will it mean for productivity? And of course, there's the opposite side of that, which we'll talk about next. And that is that the cost of living is going to decline for almost every category except for housing and travel, entertainment, eating out. So transportation, food, clothing, energy, education, medical will all see precipitous drops as a percentage of income. You say, what? How can that be? Well, this is not the first time this has happened. We've already seen from the 50s until now, we've seen very large drops in the cost of food, clothing, transportation as a percentage of income. Actually, in the case of transportation, it's meant that we've been able to have more expensive cars, larger cars, 2 cars for the same percentage of income as we were spending in the 50s or 60s. So it's massive, major drops in the overall cost of these areas. You're going to see even bigger costs, and it's going to be faster. Bigger drops in the costs, even faster. And so medical is going to go down, believe it or not. Education, the internet is going to make education a completely different thing than what we're seeing now. Males have been dropping out of higher education at an alarming rate for the last 10, 15 years. And now I think you'll see higher education in general, we'll start to see far fewer people needing to pursue it at some university resort someplace where they're spending $40 or $50 or $60,000 a year or more, and you'll see more and more people that'll be getting that same education, at least partially online, maybe all online, using virtual headsets, and we'll talk about that in a minute. Okay, so you can go down the line. I'll do this in much greater detail in a video later, but every one of those items, food will be down as a percentage of income, clothing will be down again as a percentage of income, transportation will drop precipitously as a percentage of income when we get to robotaxis, energy will drop to almost nothing. It'll almost be too cheap to meter as solar, wind, and batteries take over. So what will happen is people will have a lot of money left over that they're now spending on these things, and where will they spend it? And I'm saying it'll primarily go into either the same house for more money, because there will be not enough supply still, and so the demand supply thing will work, and people will pay way more money for the same amount of space in the same location. Education costs, people will spend more money. I'm sorry, I've got that wrong. So housing will be where people will spend more money. And then on this whole category of travel, entertainment, and eating out. And so we'll talk about that in a second in a little more detail. All right, I call it housing and fun. So number 3, major earthquakes. GPT, robotaxis, and Optimus will start cutting into many traditional jobs. This will impact some jobs very fast. There's going to be jobs that are going to go away completely within 5 years to 10 years. Others will take, as much as 5 to 20 years before they will be eliminated entirely. And there'll be some jobs that will continue on, as has been repeated almost ad nauseum now. The folks that will win this game in terms of staying in traditional kinds of jobs will be those who are the best at using GPT and robotics, and who are most adaptable to the robotaxi environment. So this impact will result in people having a lot of time on their hands, or they're going to be looking for purpose. They're going to be looking for ways to spend time that makes sense, that's fun and useful. And in a nutshell, that will be sports, games, spectator activities, travel, experience, and adventure. And again, I'm going to do a big, long video on this. Eventually, I'm going to talk about all this in detail. This has always been where people have spent their extra money. And now we'll just have way more time and way more money to be able to spend on those categories. And that will mean lots and lots of jobs for people who are now owning and or working in those industries and or being the sports, being the folks who are doing the sport or who are doing the experiences and games. Of course, we're already seeing that transition where people are now watching people in stadiums play games. They're going to watch somebody else play a game on a big screen and paying money to do that. So there's a little hint about where I'm going with this. All right, number 4. The industrials, the Dow Jones Industrials, the Standard & Poor's, it will start to slip due to fewer humans in Western nations. In other words, the population of Western nations is dropping, and it's going to drop faster and faster. So there's going to be fewer humans, and so there'll be less need for the output of these industrials. And so there will also be way less family formation. So that's also going to make cuts. So the NASDAQ is heavily tilted towards all the things that people will pay for in the future. So we've seen this NASDAQ disconnect from the Dow Jones Industrial, where the Dow has gone up a little, but the NASDAQ has gone up a lot in the last 5 months. I think this is the beginning of a major, major trend that is not going to go away. So the folks in the NASDAQs, the people that are doing the chat GPTs, the robotaxis, the Optimus, that are doing the games, that are doing the sports, that are using tech in order to make all this happen, that are providing the experiences through tech, this is where the future is going to be. And that's, I think, what you're beginning to see. Now, this is not going to be a direct, straight up line where you're going to go, oh my gosh, Randy said it, and then boom, it's not a chance. Everything like this is going to be a bunch of ups and downs, and the NASDAQ is going to have its hits just like everything else. As people take profits and people make certain decisions and transfer into other opportunities. But in general, I say this is the beginning of a divergence of the NASDAQ, a permanent divergence of the NASDAQ from the Standard & Poor's and from the Dow. Now, the Standard & Poor's tends to be able to play catch up on that as they move people in and out of the top 500 stocks. But the big thing will be the Dow and the NASDAQ separating. All right, biggest winners, AI-related companies those that are making compelling products at compelling prices in the AI world, or that have something to do with AI, or that will benefit from AI. And of course, Tesla will be by far the largest winner in all of that. And of course, other Elon Musk companies too, which unfortunately at this point, we don't have the opportunity to invest in unless we're big players. All right, so this is what I see coming. Take from that what you will. I will do a long video on that in the future. So this coming week in the business world, in the reporting world, you got like nothing going on. I mean, there's like, a couple of reports that are not going to move the market, a report on manufacturing, a report on inventory levels and whatnot. The Fed nor the markets are going to be impacted by any of this. Now, it might be that they should be impacted by one thing, although it may be a little early to have this impact. On Wednesday, the Federal Reserve will release the data on the consumer credit numbers. And this gives you a ballpark, some kind of an idea of how consumers are borrowing. Now, consumers are borrowing at record amounts. It's just going straight up. And a lot of that is mortgages. A lot of it is cars, but a lot of it is credit cards. And so consumer borrowing is now at record levels, and 17% up in 4 months. Okay, 17% up in 4 months. The March report showed the consumer spending had stayed strong. April continued to show this. We're looking at what the report is going to be this week. I think you'll still see people are borrowing like crazy. There's some expectation at a slightly lower trajectory, but it turns out that consumers have a lot of credit availability out there that they're not using. And they're also not defaulting. Now, one of the reasons for that is the mortgages are now held by people that have huge amounts of equity in their property. So people are not defaulting because they don't need to default. And also prices are now going back up again. So there's zero reason for people to be defaulting on mortgages at this point. And into the future, I can't imagine a time when that's going to be an issue. 40%, that's an old statistic. I think I'm remembering right. Something like 40% of homes are owned outright at this point. And I think it's over 65%, maybe have 50% equity. So don't quote me on that. And if you know the real numbers, put them in the comments below. But those are numbers that come to mind really quick. All right. So consumers are stretched. Probably will continue to add to this debt. No delinquencies yet. That's all good news. If they get to a place where they just can't do it anymore, feel like they just can't do it anymore, well, that might cause some kind of slowdown in the economy. Plus, of course, the student debt payments will start up in a couple of months. So there's a whole group of folks out there. They're going to have to start making that payment every month, which is going to impact their ability to take on more credit and or to pay the credit they've already taken on. Okay. And like I said about the reporting the indexes and things this week, there's hardly anything. Well, same thing's true with companies reporting. There's like zero. I mean, okay, there's a bunch of companies that report this week, but nothing that is going to have an impact. What's going to have the biggest impact this week is going to be Apple. Okay. Apple, and this is all part of the same story here that I'm telling you today. Apple is going to be unveiling their new headset. And we've got a bunch of leaks, but the reality of what's going to take place is both virtual and augmented. Yes, that's supposed to be a joke. We don't really know what the machine is going to do. We've got a bunch of hints about how effective it's going to be, about what the size is going to be, kind of like ski goggles, many are saying. Some are saying that you'll be able to put you'll be able to put a corrective lens in to this particular headset. There's been leaks that it might be $3,000, but those kind of leaks in the past have turned out to be way too high. But at $3,000, there's going to be takers. Believe me, there's going to be a bunch of people if the thing does some really fancy stuff. Some people are saying it will take over for your cell phone. I don't think that's got a chance of happening. Nobody's going to walk around with goggles all day or even have their goggles sitting there and put them on every time the phone rings or they get a text. That's nonsense. So what I can tell you is I think that it will be a significant and major breakthrough in terms of this augmented and virtual reality, in terms of gaming, in terms of being able to do things in this headset, like, for instance, practice certain tasks. Surgery has been something that's been talked about all along. I saw an augmented reality headset that I used about 4 years ago at a Orange County fair, which the military was using to help soldiers to do practice activities with this augmented reality. There's all kinds of possibilities here, but I know I'm going to be watching this particular Apple reveal. I haven't watched an Apple reveal in years. I will be watching this one. I think it is going to have a major impact. I think it will move the market. I know sometimes reveals have the opposite effect. Everybody's already bought Apple. Apple's at very high levels right now. And so therefore they could sell on the news. No, I'm thinking the news is going to be good enough that this will in fact cause Apple to keep going up. It will then raise the NASDAQ. It will raise the tech stocks, and Tesla will also benefit from this reveal. So that's what I think is going to happen. Who knows what's that? I mean, I got it so right last week. I don't deserve to get it that right again for a year. What I do think is that if Tesla can close over 117, we might actually be looking at another leg higher up to the 245 space. Now, that's not going to happen in a week like it happened last week. That's probably going to take longer, and you're going to see some ups and downs, and who knows, we might go back below 117 or at least bounce up and down against 117 or 114, somewhere in that range. But I'm not a technical expert, and I'm not an investment advisor, and this is not investment advice and all that nonsense. But the truth is that I've said it before, technical analysis works because technical analysts believe it. Okay. If you have 25% of the people investing stocks out there that are technologists, and they're looking at where there's supposed to be stopping points and starting points and drop, where it's going to bounce off of this and bounce off of that. If you get 25% of the people believing it and making their decisions based on it, then it's going to come true. Self-fulfilling prophecy. So with regard to Tesla, I think 117 is a major spot. I think 217. Have I been saying that wrong the whole time? If I've said 117 a bunch of times, it's because I actually wrote it here on my script. So it's supposed to be 217. So 217 is where I'm hoping that we will bust through and go to 245. And then we might come back down and bounce around at that 217 level again, but we will be starting a march. If the Apple news is crazy big, then maybe we go past 245 in the next couple of weeks because, Tesla moves that fast when things happen. Or if there's a big Tesla surprise announcement. The truth is, I don't expect any big Tesla announcements for the rest of the month, for the rest of June. Everybody's off doing stuff in June. They're getting folks graduating. People are starting their vacations. People are, this is kind of a lazy month. So I don't expect much activity other than Elon being out there on the circuit, continuing to talk and to create all that great PR for the company. So if the July 2 numbers, so this is a little advanced information, a little advanced idea of what I'm thinking. If the July 2 numbers come in above 470,000, so some people are saying 440. We'll talk about this on my video for tomorrow morning, the one that comes out tomorrow morning. We'll be talking about if the 140 area, I'm sorry, 440 area is what people are expecting. I'm sorry, the street is expecting and some people are expecting. I've said 490, others are saying over 500. If it comes in at 470 or higher, the stock is going to move radically, okay? So that's something to watch for. Comes in at 450, 455, 460. Yeah, that'll be another something to buoy the stock, and it'll continue on its way towards 300 eventually. But if it comes in at 470, 490, 500, 500 something, boy, the stock should move pretty dramatically, maybe getting to an early 300. All right, so just a little summary there real quick. I'm not sure that I pulled everything together. So we've got all these major changes that are taking place, and there's going to be a future world that is going to be heavily invested. People are going to be heavily invested in sports and games and travel and experience. And that's what Apple is going to be announcing on Monday is experience. They're going to be games. It's going to probably be involved in sports. It's going to be involved in a lot of stuff that will be educational and helping us into this new world. Therefore, that's why I think Apple will go up, and I think that the NASDAQ will go up, and I think that Tesla will go up because all of those companies most of those companies are looking at that future world that I tried to describe in this video. If this is helpful, if it was fun, if you got anything out of it, please hit like, hit subscribe, hit notify. I'm telling you, stuff I got coming this week, I honestly believe the stuff that's coming this week will be the best that's ever been on this channel. I think it'll be new. I think it'll be stuff that nobody else is talking about. And I think it'll be at a depth because I'm going to have Brian Wang. I'm going to have Larry Goldberg back. These are people that are extremely knowledgeable in their categories. And I think will enlighten all of us. I do these shows. I'm kind of like Lex Friedman in one way, only one way. I'm kind of Lex Friedman in that I would do this show just to get the education I get from bringing on the guests that I want to bring on. Anyway, hit if you'd like to help support the channel, be a producer on this channel. It's only $5 a month. Go down and look up Patreon, and that will take care of that. Okay. As usual, it's been great talking to you.